You're watching news headlines on mining.com. I'm Devin Murugan. Gold continued its record-breaking climb this week, surpassing $4,000 an ounce for the first time as global uncertainty sent investors rushing to the safe haven metal. Spot gold hit $4,049 before easing slightly to $4,044 on Wednesday, while U.S. futures rose 1.5%, both fresh all-time highs. Now, the milestone marks gold's 40th record this year, doubling in value from 2 years ago as inflation worries, political turmoil, and central bank buying kept demand strong. Analysts say the rally reflects a structural shift, with central banks, investors, and funds all increasing holdings amid fears over Federal Reserve independence and global instability. Now, major banks now see gold heading higher still, with Goldman Sachs forecasting nearly $4,900 an ounce by December. Silver surged to a record $49.55 an ounce on Wednesday, tracking gold's historic rally and surging safe haven demand. Futures climbed 3.2% to $49.20 in New York, breaking the metal's 1980 high. Analysts say silver is benefiting from the same drivers lifting gold: global uncertainty, central bank buying, and strong inflows into ETFs. Standard Chartered noted rising lease rates and record high COMEX stocks amid strong Indian demand, and that suggests a tightening market. Silver is now up more than 65% this year, outpacing gold as investors pile into precious metals. But the story doesn't end there. Copper prices surged to a 16-month high after Teck Resources slashed its 2025 production targets, citing problems at its Quebrada Blanca mine in Chile and Highland Valley Copper in Canada. On the London Metal Exchange, copper climbed 0.5% to $10,815 a ton, while U.S. futures rose to $11,343. Teck now expects output of 170,000 to 190,000 tons next year, well below its earlier guidance. Analysts say the cut deepens an already tight market following major disruptions at mines in Chile, Congo, and Indonesia. Citi forecasts prices could top $12,000 a ton next year as supply shortfalls collide with renewed investor demand. Back on that story on Teck Resources, it's cut its 2025 copper production forecast after ongoing challenges at its Quebrada Blanca mine in Chile and Highland Valley Copper in Canada. The company, now merging with Anglo American, says output next year will range between 170,000 and 190,000 tons. Now, that's down from 210,000 tons to 230,000. Well, Teck blamed extended downtime tied to tailings dam work, which also affects the 2026 guidance. Costs are climbing, with unit cash costs projected at up to $3 a pound next year before easing as production recovers. Despite the setbacks, Teck says the $53 billion Anglo deal remains on track and strategically sound. Kazakhstan's Fincraft group is looking to buy Toronto-listed Tethys Petroleum in a move that could expand its footprint from mining into oil and gas. The plan, outlined in a non-binding offer last month, fits Fincraft's push to control more of the region's energy and mineral resources. The company already owns major assets in nickel, cobalt, coal, and gold through firms like Kaznickel and Zhubakol Premium. Its billionaire chairman, Kengiz Rakishev, has shifted focus in recent years from tech startups to building an integrated industrial network at home. By acquiring Tethys, Fincraft will bring mineral and energy production under one umbrella, tightening its grip on Central Asia's resource base. Well, that's where we leave your news headlines on mining.com for now.